Hey there and welcome. Today we're going to decode one of the absolute best tools for understanding what the market is really doing, the market profile. If you've ever felt like you're just lost in the day-to-day chaos of the charts, well, this one's for you.
You ever just stare at a chart after the market closes and all you see is, well, a mess? A bunch of jagged ups and downs that feel totally random, right? It's like trying to listen to a radio station buried in static.
But what if I told you it's not random at all? Not even close. What if every single one of those trading days is telling a story, a narrative with characters, a plot, a beginning, a middle, and an end?
And the tool that lets us read that story? It's called the market profile. You can think of it like the market's secret diary. And right now, in the next few minutes, we're going to learn how to read its language so you can see exactly what the market was trying to accomplish today.
Okay, so you can't have a good story without characters, right? The market is no different. So let's kick things off by meeting the two main players whose actions are writing this daily story.
On one side, you've got your day traders. These are the short-term folks, making quick moves, scalping small profits here and there. But on the other side, you have the long-term players. These are the giants, the big institutions, the major funds. They're moving the really big money, and whether they show up to play or not, that defines the entire story of the day.
All right, we've got our characters. Now let's dive into the different kinds of stories they can create. We're going to start with the quiet days. The ones where the market kind of just feels like it's taken a breather.
And our first story type is the non-trend day. And yeah, the name pretty much says it all. This day is about a total lack of direction.
This is that super quiet, almost boring day you see right before some huge news drops, like a big Fed announcement. The giants, they're sitting on their hands, waiting to see what happens. And that leaves the market almost completely to the day traders, creating this low-energy, wait-and-see vibe.
So how do you spot one of these in the wild? Well, here's your cheat sheet. The day's trading range is going to be super narrow, the volume will be noticeably low, and here's the big one. The entire day's price action stays completely trapped inside the high and low of the day before. When you see that, you know the giants have taken the day off.
Now, let's move on to the most common story the market tells. This is what we call the normal day.
This is the absolute bread and butter of market profile, happening something like 50 to 60% of the time. The story here is pretty straightforward. The market does a little exploring early on, it finds a price level that buyers and sellers both agree is fair, and then it just kind of hangs out there for most of the day.
And spotting a normal day is pretty easy. It usually kicks off with a wide range in that first hour. We call that the initial balance. Then, as the day goes on, all the action gets funneled into the middle, creating that classic, beautiful bell curve shape. The spot with the most volume, the point of control, sits right smack in the middle of that bell.
Okay, we've seen the chill days. Now it's time for the drama. Let's talk about the days when those long-term players, the giants, really step onto the field and make their presence known in a huge way.
And that brings us to the trend day. Oh yeah, this story is all about pure, unadulterated conviction. It's about overwhelming force coming from one side of the market.
On a trend day, the giants are in total control right from the opening bell. There's no back and forth, no searching for balance. Nope, they have one goal in mind, and they just push the market relentlessly in that one direction all day long.
And you can literally watch this story unfold. It starts with a surprisingly tight opening range. Then, bam, the giants arrive with an agenda. That kicks off a powerful one-way freight train of a move that just keeps going, leaving behind a profile that looks tall, thin, and all stretched out. The perfect picture of a one-sided market.
Now, a very close cousin to the trend day is something called the normal variation day. It's also driven by the giants, but the plot twist here is all about timing.
See, on this day, the big players are a little more patient. They let the market establish its opening range first. But once they see a price they like, they jump in aggressively and drive the market way outside that opening range, often pushing it more than double the size. So the key difference is when that big explosive move happens. It's not at the open, it's later in the day.
Okay, last but not least, let's look at the days that are all about conflict. This is when both the buying giants and the selling giants show up to the party and they are ready to fight. This is the tug-of-war.
And the profile that captures this epic battle is called the neutral day.
On a neutral day, you have long-term buyers and long-term sellers showing up in force, and neither side is giving an inch.
The dead giveaway for this day type is that the price range breaks out beyond the initial balance on both sides. It goes above the high and it goes below the low. That is the visual proof of a fierce battle for control.
You can almost see the fight play out in real time. The buyers make their move, pushing the price up, taking new ground, but then, whoa, here come the sellers with a massive counterattack, shoving it all the way back down and taking out the lows. It is a genuine two-sided battle for territory.
So let's just tie this all together real quick. On a normal day, things are balanced. The initial range is wide, and the risk-reward is generally lower. On a powerful trend day, the long-term players are running the show, the initial range is narrow, and that can signal a much bigger risk-reward opportunity. And finally, on a neutral day, you've got both giants duking it out, which leads to a more, well, neutral risk profile.
And there you have it. By understanding these basic day types, you've just learned the alphabet of the market's daily language. You're not looking at random noise anymore. You're actually reading a story. So the only question left is, what story is the market writing for you today?